The Japanese yen recovered broadly today as the Bank of Japan started its two-day policy meeting. Expectation on the post-meeting announcement is high considering the yen is down more than 8% against the dollar since December and nearly 11% against the euro. It's generally expected that the bank would expand the stimulus program, probably by another 10 trillion yen. The move would be significant in a way that it's the first time in more than 10 years that the central bank expands easing in 2 consecutive meetings. Also, in response to new Prime Minister Shinzo Abe's pressure, the central bank will likely double the inflation target to 2%. A joint statement will be issued with the government instating the bank's commitment to end deflation and bring recovery. These are well priced in the markets, and as mentioned before, the Bank of Japan needs to do more to extend the sell-off in the oversold yen. Without moves like open-ended easing, or removal of deposit interest, we might see a larger after-the-news rebound in the yen. Nonetheless, the overall trend in the yen will remain bearish no matter what happens tomorrow. It's been made very clear that Abe will choose a dove to be the next Bank of Japan governor after Shirakawa ends his term in April. And more aggressive easing is expected after that. The recent sell-off in the yen prompted some talk that the Bank of Japan could adopt a slower pace of easing as the yen is already weak. But it's believed that US dollar Japanese yen at around 90 is still at a level that's troubling exporters. The bank needs to at least maintain its easing pace until dollar yen breaks above 100. So, any post-Bank of Japan meeting pullback in yen crosses should be treated as buying opportunities for another leg up in short to medium term. In the Eurozone, Bundesbank head and European Central Bank Governing Council member Wiedmann said in a paper that it's wrong and dangerous to assume central banks as the sole crisis manager. And he criticized that the reform conditions for the ECB's OMT program is dependent on governments and is problematic. He also noted that the OMT program can bring considerable risks to the monetary policy, and should be limited and prevented. Monetary policy can only buy more time, he said. It is like a painkiller which will not erase the reasons but can cause risks and side effects. Finance ministers are having their first meeting in 2013 today in Brussels and will discuss the way the European Stability Mechanism could bypass governments and be channeled directly through to banks. Latest CFTC data showed speculators turned net euro long again on January 15, to 7,300 contracts, compared to the prior week's 8,000 net shorts. Yen net shorts dropped for the 5th consecutive week to 65,000. Even though the Swiss franc dropped sharply against the euro, Swissy net longs rose slightly to 12,800 contracts. Sterling net longs were slightly up to 28,300. Australian dollar longs rose further to